Welcome in, everybody. Today's going to be a good show. We got Josh and Josh. The power of Joshes, they will collide today. We're going to be talking about profiles. We're going to be talking about all kinds of different stuff. We're going to announce something new today. I think Josh is going to be the guy that announces. Josh has a little bit of beard going on. He's trying to copy me. Yeah. So welcome in, everybody. We'll give everybody some time to start rolling in. Keep in mind, today we're going to be doing a giveaway like always. So stick around. We'll do the marble race or the wheel. I don't know. We'll do one of those cool things. So let's get into it. So introductions. We got Josh. Everybody knows who Josh is, and you don't know which Josh I'm talking about, but take a guess. It is the Josh Squad. All right, guys. Welcome in. Intro. Hello.
Good intro. Yep, welcoming Josh Schuler here. Trade with Profile, friend of ours. We've had him on before. Excited to have him on again. He's going to go over some of his trades and go over the 4 questions he always asks before getting every trade. And he's going to show you how he did it. So this will be cool. Guys, listen up. This is he's dropping some knowledge here, and he does every time. So I'll let you take it away, Josh.
Yeah, man. Thanks for the opportunity. Always good chance to see you guys. Let's talk about process. And if your objective is to have a consistent equity curve, which I think most people do, like, how do you go after that? And I have a conviction that focusing on process takes care of the profit. And one of the processes that I use that works in all time frames, and I think that is important to say, because not all processes are effective in all time frames or applicable in all ways. You know, you see someone post something about, hey, when this happens, do this, and you're like, okay, but I don't know what your capitalization level is. I don't know what your time frame is. But this process is one that works always in any time that you pull the trigger. And it's one that I developed when I was working on a desk with RJO. We would have people come in, and we're doing trade audits all the time. Like, why was that trade taken? What was the driving idea behind that? How do you defend that to your risk manager? And it's real simple. So the process just includes 4 questions. And the how you use this process is, if you haven't asked and answered these questions, you don't have a trade. Just full stop. So the process is to go through these 4 questions, make sure you have an answer for them before you pull the trigger. Now, obviously, you can get faster down, as you're working through it, but a playbook trade is one that answers these 4 questions. So what are these 4 questions? And to make that concrete, we're going to look at some examples. So I have cues set up from this morning, but here's the 4 questions, and we'll go through the specific example. So the first question is, what is the target or the destination? So I'm actually determining whether or not I want to be active based on where I believe price is going to go. This is really, 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 really important. It can help in lots of ways, offsetting some of the typical behaviors that developing traders struggle with around, should I stay in this thing? Should I get out of it? Is the trade over? Did I leave money on the table? All the things that you've heard. Where is the exit? We would call that the first trade. The first trade is determining where the exit is. And there's a number of different ways to articulate what that hypothesis is. Again, it's not a guarantee, but it is a reasonable guess. And then the second question is what would I risk to go get that target? So if I believe that there's a destination and it's 100 points away, how much heat am I willing to take for that? And can I define that and describe that in an asymmetric way, meaning that I would see more reward for that risk? The third question is, once I pull the trigger and get in, how should this play out? We are all storytellers when we enter a trade or we enter an investment. We are on the far right end of the chart. We don't know what's going to happen. We have a story in our head. Is it following that narrative? And some of the things that can impact that are time. It could be further behavior. It could be velocity. Like, the things that should happen that would tell you, hey, I made the right decision. And then the last one, so important. What would tell me that I'm wrong? Like, how would I know that this is not following the script? And that could be this should have played out in this amount of time. It didn't, or it should have got to this price, or I should have seen this additional behavior. I'm not seeing that. that's a clue to get out. It's if there's of the 4 questions, I mean, the 2 that for me that are the most crucial are, 1, the target, because if I'm assessing it, has that opportunity gone out of the way? And then the last one is so important because our brains, this is a way that the evolutionary brain does not help us. It will do everything it can to convince us to stay in once we've pulled the trigger. So to stay in this game of trading, one of the skills that we have to develop is the ability to know when we're wrong and preserve capital that we can redeploy in another idea. If I don't have the ability to know that I'm wrong and cut ties with this thing, I mean, and it's an emotional attachment. Right? Like I'm trying to get rid of this emotional attachment to this outcome that I think will happen. If I can't do that, there's a pretty direct line to what kind of outcomes I'll get. So these are the 4 questions. What's the opportunity, or target? What I believe is going to happen? What would I risk for that? What would tell me that I'm right? What would tell me that I'm wrong? So what we're going to do here is we're going to now look at 2 playbook opportunities today in NASDAQ futures using these 4 questions, and we'll walk through both of them. So here's my screen. So on the left side, it's the same chart. One just has a little bit more granularity. One on the left helps me see a number of things. One, I can see composite value for the last 5 days. I always know where the most traded price of the last 5 sessions is. I know where yesterday's references are because how we trade today is connected to yesterday. And then I can see what happened overnight. So let's look at this one on the right. We have now opened here. So this is right off the open. And I want you to look specifically at this open. So right around 25,000, we open, and we don't really trade at all past that price. So I would call this an open drive, lower open. And we're below, we tested above monthly VWAP, back below it. What are some other things that I'm noticing? I mean, I'm in a gap, meaning we're completely in different territory than the prior range. Okay, so that's going to be something that we'll monitor.
Oh, could we could we have you draw in there maybe? Just explaining like what's on the chart.
Let's see.
Also, there's kind of probably be a lot of new viewers that are joining us. They probably have zero idea what they're looking at right now. So if you could kind of, I know there's a lot going on. Even for me, I can see there's some profiles, some volume profiles, some other things on there. If you could kind of break down each chart and be like, hey, this is what we're looking at here. This is
let's make
what
it more
I'm looking
simple
for, kind of thing. Yeah,
totally.
Very complex.
So here we've here I don't have, because the way we set up this screen share, I don't have my pen, or I could draw over this. Let me find a drawing tool here real quick, because I think there is.
So if you start maybe to the right, just talk about the right side edge by price. Yep. Explain what you're looking for.
You can see my mouse, right?
Yes, we can see your mouse.
Okay, so this is volume profile for the last 5 sessions.
Okay, so you use a rolling 5-day rolling session, and that gives you a profile, something to look at. Okay, cool.
Yeah, because I'm a behaviorist. That means that when I'm looking at markets, I'm looking at where people are positioned, and a volume profile will tell you where people are positioned.
How do you get that from that? Is it the size of the profile, or is it a certain
absolutely
expectation you like to see?
How does the histogram build out? Is that I got buyers and sellers agreeing at that price.
Got it. Okay.
So for example, in this current orientation, 24,900-ish is the most traded price of the last 5 sessions. Now, why 5 sessions? Like, is that an arbitrary decision? No. We look at 5 sessions, 20 sessions, 90 sessions, because of where options are. So there's weeklies, monthlies, quarterlies. So participants are making decisions on a daily basis. Well, that's okay. We can look at an isolated daily session. We can look over a rolling 5 days, 20 days, and 90 days. Okay.
So there's correlation between what rolling periods you're looking at because of the options, which totally 100% makes sense. But for any of the people that are probably new in this room, that's really profound and good knowledge for the people to realize, like, look, you want to look at those subsets of data, because That's where people are actually making moves and stuff. So totally makes sense. Awesome. Thank
Yeah,
you.
you don't have to trade. You don't have to trade options, but I do have a conviction that if you're going to be in markets, we live in a world where the tail wags the dog. So the derivatives drive what happens in the underlying.
And isn't options traffic and in volume, basically not traffic, but volumes actually continue to pick up, right?
Yes.
Okay. So that totally makes sense that you're utilizing the options data to kind of determine, hey, where am I getting in? What is the market doing? It's awesome.
Yeah. And in related form, so if I clicked at this time frame and you can see these price levels over here on the left. So these are what we call GEX levels or gamma exposure. Let's see if I have another. No, I just have this cluster of this. So these are prices where there is a cluster of options positions as we came into the session.
Got it. So with that information, do you tend to see choppiness around those areas, or do you happen to see like price drive beyond those areas? How do those areas impact your trading? Like, is there an edge there?
They are absolutely magnets, and they will.
Got it.
The belief is that they will slow the auction and make it challenging to move through. And there's a reflexive behavior to that is why that plays out. That we could do a conversation at some point about the reflexive nature of if somebody buys a call, someone sells a call, and someone hedges off that risk. And it's actually the hedging off of that risk in futures is what we see in a volume profile. So when you see, like, back to this chart where you see this 5-day profile on the right, that's giving you some clues as to where participants are accumulating futures inventory and placing trades. And where there's peaks in that, those are the value references, meaning that there's participants who are willing to buy and sell at those prices. Where there's a valley or it's thin, those are places where we didn't have a lot of people participate. And I tell people, so most people that are likely watching this, came way after the floors closed. But if you ever watch a documentary of the trading floors, which I think is a valuable thing to do, even though they're not open, but what you would see is how loud they were. That's actually how people knew how to trade. They knew when to trade was how loud the pit was. And that if it's loud and there's lots of transactions going back and forth, what's going to be building out at those prices? Volume. So this is essentially like Braille. Because we can't see the pit, we can't hear it anymore. I can see those composite references across those time frames and have that in view. Because when we're making decisions, I may be looking at whatever time frame, 1 minute, 3 minute, whatever, but I'm in a world where there's somebody who's thinking in weekly terms and monthly terms and quarterly terms and yearly terms. So it's good to know where those references are. The higher time frame participant always drives the auction. So knowing where they are, really helpful.
Yeah, that makes a ton of sense. So in those lower values, what are the traits you see in those lower values as far as price? Does it move real quick, or does it feel those areas? And then on the more built out areas, do you see a lot more back and forth trading, which would equal chop? Or what's your methodology for those two different areas in the volume profile, at least on the 5-day?
Absolutely. So like on the, if I go back to the composite, that 900, I'm expecting that's going to slow the auction because I'm going to re-engage those participants. Now, if I was to push up into this area like 25,100 or an area that's lower volume, how does that behave? It's a little bit like skipping a rock across a lake. It may skip right across it and go to the other side of where there's acceptance, or that may be a spot where we see a reversal. The reason that there's not a lot of volume at those prices is because participants just weren't active there. Like, those are what we call price rejection. So if it's a rejected price, I come back in there, do they reject it again? You find when you look at these time frames that there are areas where like nobody wants to do business. And when I mean nobody, I mean like nobody of size wants to do business at those prices.
So are you kind of utilizing market auction theory along with profiles? Is that what you would kind of identify with, or is your methodology different just based on what
that's a great question. I would articulate it this way. Profiles are the way that we discern the auction behavior. So
Okay.
it's all operating within auction theory. And all auction theory says is that decisions are made based on a relationship of price to value. And so then we've got to do that, we got to define where value is. And what's really cool about a profile is that we can have objective references of value based on the time frame that we're active. So like within this chart, okay, here's the new session open. Okay, where are the value references that are nearby? If I look at just the prior session, the value reference is 24,900. That's the most traded price from yesterday. That's also the most traded price for the last 5 days. Those are value references. Monthly VWAP. VWAP, like anchored time frame VWAPs, like a monthly VWAP, weekly VWAP, quarterly VWAP. So those are other ways to express those same time frames. And those are also value references that are incorporated. All of those are part of looking through the lens of auction theory.
And the nice thing about this style is things stay consistent, right? You can lean on the same levels because they build out the same way every single month, day over day. And that is really what it comes down to. Just like your process that you have stays consistent. And that's where a lot of traders lose their ways, because they change things every single day. They look at the market different every single day, and there's no real framework that they work off of, where you've established a framework and now you can build out strategies around your framework because it stays consistent.
Yeah. It's very challenging when you're developing to try to figure out what, as you're building around the references that you fold into your narrative analysis, right? So all of this just kind of gives me an idea of, from a narrative analysis of what's going on. It's not the trade. Like, it's not a trade. It's describing, okay, contextually, like, who do I think is in control? What are the significant references where I expect a certain behavior or certain reaction? Do I know where those are and why? And like all of these references I would offer to any trader as valid references that many people look at. So, and not just people look at, but programs react to. So like a monthly VWAP, even if you're trading intraday, know where monthly VWAP is, know where weekly VWAP is, know where the 5-day is. Like, know where the prior day's point of control is, know where a prior high is, a prior weekly high, a prior weekly close. References that are outside of a 1 minute, 3 minute, 15, some arbitrary time frame, a reference that anybody on any time frame can look at, those are more powerful.
Yeah, 100% agreed.
So,
okay, so yeah, go ahead, Josh.
Yeah, I was gonna say, so if that's your baseline now, understanding the reference points based on high volume nodes with volume profile. I guess we could talk about getting into a trade now. So how are you gonna?
Yeah. Fair enough. So if we look at this chart here, like, here's some of the things that I'm thinking about this morning. We're opening in new territory. Meaning we had this open above the monthly VWAP. Now we're currently right below it. Something that I look at around some known reference of value is, okay, if I come to that reference of value, does it change how participants are aligned around that? What does that mean? Okay, we've been below monthly VWAP for several sessions, right? So we had a big day down on Friday. We've been below that. So generally, everyone's accepting lower prices within reason. But if I was to get back above monthly VWAP, that could tell me, oh, wait a second, the perception of the herd has changed, and we're going to now look for value somewhere else. And whenever we're making decisions, are we accepting prior value? Are we believing that value is somewhere else? So I'm looking here at, okay, we're rejecting for the moment prior day's value. We're testing this monthly value. How does that go? All right. And so if we play this forward, so here we are right at the open. I'm just going to let this play, and then I'm going to talk about the actual 4-question trade.
And then that shaded area, I'm assuming that's shaded for single prints.
That's right.
What's your thesis on singles? Do those create like a jumping off point, or do they cause, let's say, resistance, or do they move quickly? Like, what's your kind of reason for having singles?
Yeah, so let's back into what is a single print, and how are those created. So it is an area where the auction moved swiftly because there was high conviction. like it's a midday gap, right? We didn't spend more than a half an hour at those prices, if that, or we didn't spend any other half an hour at those prices. And so that is an area where there are strong sellers. So it also represents what we call poor structure. Poor structure is defined as we don't know if those prices are valid. We just move so swiftly. Often markets will go back and test those and just see if they're valid. So, in my head, I'm going, okay, if I get closer to those, will we trade back through those? But does that re-engage those sellers? But it can be a way to clean those up. And in fact, on this one, that's part of what I'm thinking is, okay, we're pushing below monthly VWAP. But if we were to be unable to hold in the prior range and come back through the open, that is a playbook trade that I have. And that's an open test go with. So I've opened, I'm testing a prior reference, but then I come back through that open, and then I'm going to go with that information. And that information is that we were unable to stay in the prior range. What's the target? Like, what am I looking for? So I'm going to be looking for first overnight high, which at this point is 25.31. But I'm also looking for expected ranges, which would mean, like, at this point, we've only done 56 points. I'd be looking for us to push up toward cleaning this first batch of singles. So like 125 is the area. So that's the idea. Now I just got to see, does that happen or not? So we're testing the prior range. If we come back through that open, then I'll be long. So I can literally go in here and put in the stop. And that would be my entry. Now, if I get entered, we've already identified that we're looking for this area to clean these singles. What would be wrong is if I get filled, if we come back below that monthly VWAP and back into the prior range, that's what shouldn't happen. So what should happen is we came into this prior range and we said, nope, we want to be in different ranges. And so then we'll reject back out. And then what should follow on with that? We should push towards those destinations. What shouldn't happen? Again, I should not be able to get back below monthly VWAP if I get filled.
Yeah, and it's great because you have a hypothetical situation. It's like, if it does this, then I expect this. If it does this, then I expect this. And you're not getting so tied up on like, this has to go higher. You're like, no, I have an option for both. Yep. Right. And that's what good traders do, is they don't get it, fixated on any one thing. It's like, oh, the market has to go up. It's like, no, they have hypothetical situations for if it goes up or down, and then what they expect to see at particular levels. Right. It just helps you a lot with your mental game. So I'm loving the style of trading that you utilize.
And I think there's a overlap here with a lot of traders. You're kind of seeing something through a different lens that you might see. I know right now popular is some of those ICT concepts. But your trade right here is looking for previous reference of value, which it won't exactly, but it might overlap here with his reference point is with a gap fill. So he's sort of looking for a reference point being hit, coming back up. It's not always gonna be the same because he's basing his reference points on volume profile. So it's not a time-based one necessarily. He's kind of using the combination of both, but we're all looking at the market through different lens. This is more the auction market theory approach, which I prefer, but you'll end up getting a lot of people taking the same trade. So that's even more reason to find these trades.
Yeah, that point of you get other people taking these trades. Why is that so insightful and helpful? Is because I want to be aligned with participants who want to go in the same direction as me.
Sure.
So that's why look at references that other people, like a lot of people can see, like right now. So now we're filled. Okay, what shouldn't happen now? I should not be able to accept back inside the prior range. I tested it. I've rejected it. So I shouldn't be able to get back inside that. So that's my absolute, I'm wrong.
Yeah, and you have a clear line in the sand, and a lot of times people don't have that. They leave that up to their intuition or like how they're feeling, and yours is like, no. If it gets beyond this point, right, per my setup, I'm out.
Mhm.
That's it. I'm wrong, which is nice. Because if you don't have clarity there, people just they end up making stuff up on the fly, and then they get crushed. And that will work sometimes, but generally it doesn't work.
So the price. I think there's a couple ways you're probably looking at when your trade would necessarily be wrong. One would be price accepting, maybe based on time near the area, and then the other would be a hard stop at a price point that's just, no, this went too far into prior value. Is that how you always kind of approach it?
Yep. And we could look at a smaller time frame and use things like an intraday reference of value is VWAP, right? So, or VWAP, depending on how you want to pronounce it. Are those VWAP bands starting to spread, up and to the right? Is it flat? Like if you're in that 1 to 2 standard deviation, that can be a great confirmation that you're going in the direction that you want to go.
Mm-hmm.
Other things that, let's pause this real quick. Other things that were informing this trade was we were inside of overnight high or the overnight range. So in 98% of all sessions, we will, if we open inside that overnight range, we're going to test one side or the other. That's a pretty significant behavioral statistic.
Yeah.
Mm-hmm.
Right. And if overnight low is down here at 740 and I've rejected which one am I more likely to test? Okay, overnight high. So that can even help me, stay in the trade. And then within this specific trade, I mean, I'm really waiting for either that destination to scale anything, or like the target is either that price or the extension of the first hour. So once the initial balance is set and extended, then that trade is over. That playbook trade is over.
Cool. So I guess we get back into some of the original 4 questions you had.
Yep. Yeah. So at this point, what should happen? We should continue to accept up in these prices. We should hold, I shouldn't be able to go through halfway back. So I'm going to pull this stop up here, essentially to where the open is.
And do you scale pieces off as you're right? Are you the type of trader that likes to scale out?
I will. And so, either I'm going to hit that 22 and clean those singles, or I'm going to extend the initial balance, and that will be the place at which I'll scale and significantly reduce the position.
And do you scale because it actually is more profitable, or is it more like a mental thing? For me, I scale out because it helps me mentally hold the trade longer.
I scale out. So there are different approaches that I see people try to do with scaling. So some will do. Let's go at this again. If you don't know where the destination is, or you don't have a target you're actually aiming for, I've seen people scale in this idea of, I'm in this trade, I want to scale off my risk. So I want to be able to give myself some cushion. If I can get 20 points, then I'll take some off, and that lowers my cost basis, gives me some cushion perspective. What ends up happening is that it goes significantly in direction. Of course, they hadn't defined that before, and then it goes significantly, and they're undersized toward that position. Like how you really grow your account, one is to identify that target, and is that thing still open? Okay, yeah, I'm going to stay in that until that's complete, and then I'm going to scale. Even if that means that I may take a full loss, and I'll inevitably get people who go, but you had it green and you didn't take profit on that one. Yeah, that's what that's right.
I'm just waiting.
It happens.
Totally. Okay, so here we're going to come up here. I'm going to slow this down because we're going to come up here on the IB.
And this is the live trade that you took today. Do you stream on YouTube
this morning.
Or not?
Yep.
Okay.
No, this was a trade I took this morning. So we're just doing the replay here.
And one interesting thing I wanted to make sure everyone realized was his targets. His targets aren't just, I'm just going to let it go and, I'll take profits eventually and it could go to the moon today. Maybe it will. But what he's got is he has measured moves based on recency. So he has a recency idea of what he's using both structure and as price distance based on that recency. So those single prints are target for him. He's expecting, he's not predicting, but he's anticipating that's where price has a reasonable distance to go.
Yep. And just like the overnight stat in 98% of all sessions, we're going to trade past the first hour's high or low. Okay, so here we are. So we're going to take some off. If we breach that.
And did you move your stop for the stop out now, or did you?
Yeah, now that we're right here, where I'm looking for them to get outside the IB, and then we'll scale out there.
And it looks like you moved your stop. Was the reason behind that you put it on the other side of kind of where the volume was?
Where the volume was, and then also where there were some order flow imbalance, like some selling, some
Okay.
aggressive selling that didn't get any follow through, right? So, but if we come back through that price around 71, that could re-engage those sellers and cause us to test back to where this impulsive buying was, kind of the 40s through 50s. So I don't want to take that heat now that we're so close to the actual. Oh, we did take out the IB high, so we can go ahead and scale a bunch of this out.
So basically, you're trailing it based on new areas of value, and you're protecting what you do have based on lower value nodes along the way.
Yeah.
So if those imbalances go to attempt to fill, then you're shaving some off.
Yeah. Other reasons to be aggressive on covering now that we took out the IB. So notice now we've got singles here in the initial balance range. So we have an area of price rejection within the first hour, and this is a pretty wide initial balance.
Yeah.
So, something to watch is how wide is that first hour. The wider that range is relative to its average, the more likely we're going to collapse back in on it. The narrow, think of it, because 80% of the volume takes place in that first hour. If that's narrow, and if I think about the volume as a bucket that I'm going to pour into it, well, if it's a narrow bucket, it's likely to spill over. If it's a really wide basin, it's likely to absorb it. So when it's a really wide IB like that, I get really aggressive and go, okay, yep, good time to get back to the sidelines. So this is playbook trade one. How are we doing on time? Do we have time to do the other one?
We're good. Just keep on.
Yeah,
going.
we're good. Maybe open up some questions before we jump on to the next trade. I think we have a couple. Do you trade without candles? Doesn't seem like you utilize cameras, at least in the screens you've shared so far. Bit complicated. Yeah, so definitely. I think with trading, as you start to learn more and more strategies, you start to like mix things in, and then just based on, as long as your structure stays consistent. And that's the major thing, is like his system, it's a structure. And then through that structure, he's able to view the market in the same lens every single day, and then create hypotheticals on each side, like long and short, and then figure out where the edge is and how to trade it and stuff like that. And that's the main thing for most traders to do. Yes, it's complex, but learn different systems to figure out what makes sense to you, and then cherry pick what works, what doesn't work, what you understand. And that's the best way to adopt new systems. And understand, yes, some will be complex, some will be super simple, but it's not wrong or right as long as you understand it.
Yeah, well said. You get people that will say, yeah, you don't use candles. Should I not use candles? No, I mean, or even any, I mean, I don't use moving averages. And you're like, was it wrong to use moving averages? No, I mean, here's I think the helpful rubric is use things that help you make decisions. So if it doesn't help you make a decision, then get it off your chart.
Sure.
But if it helps you, and have a tilt towards simplicity. So, have a tilt towards removing, like every FOMC day, I take a day off, and I use that day to revise and say, okay, what's working, because those are, we get 8 of those a year. What's working, what's not, what's helpful, what am I leaning on to make decisions, what am I not, and how do I simplify that so that I'm only looking at things that I'm using to make decisions. And if a candle helps you make a decision, it helps you define risk, awesome, use it. A moving average, great. A MACD, whatever. Yeah, just use them. And also know, like, if you are using indicators, understand the math behind what that is. Like you use an RSI, for example. What is an RSI? It's a relative strength indicator. What does that mean? It's measuring the velocity of price within a relative time frame. That could be really helpful, right?
Sure.
It can be helpful to tell you, oh yeah, it's been increasing. It's strong. If someone says it's overbought or oversold, well, what informs that? That's another interesting thing.
It's good to know why you're basically taking advantage of something to simplify the data, but you are diluting it. But you're giving yourself a calculation in real time, so that can or can't be helpful. Something I say to people is try not to overlap your indicators too much. Like, you don't want 6 different variations of how RSI is giving you information about maybe volatility or directional candle structure. So you really want to kind of just take it off your chart if you're not using it anymore, for sure. That's number one. Number two is it's okay to overlap your indicators and what they're telling you. Just don't stack them vertically for the same concept, because now you're telling yourself different signals. Maybe there's a strategy there that someone does. It's usually not the case. Usually you want to segment things.
And another thing, I think
directional.
A lot of times people use signals like RSI and think that's their setup.
Yeah.
Mm-hmm.
Oh, RSI crossed here, I need to get long. It's like, dude, it's not a setup, right? You've just given us a setup. That you've identified everything. It's very systematic. You've just shared something that has an edge, and all people need to do is watch this video and go like, okay, well, what is he doing? Because you've explained everything. I understand it, right? I do have some knowledge with market auction theory, and I understand, volume profile and all those other things, but you explain it all. Now people just have to take what you've taught them and do the same thing every single day and play out their edge. A lot of people, what they do is they get in just like I did, and they'll look at like a VWAP, where they'll look at like an 8 EMA or a 9 or a 10, and they'll be like, I can take trades off this. And it's like, no, you can't. You can use that maybe as an entry signal or additional criteria for setup, but it's really not going to stay consistent. Let's say one day you have an ATR of this, and the next day you have a low ATR, or maybe one day you're way outside, you're in singles, and you're trying to take a 9 EMA trade, and it's not going to work, right? Where you have a very specific view of the market every single day that doesn't change. You know when things are going to happen, when they're not, and you're building hypos around that, right? That's the difference. So don't get too tied up in the indicators. Yeah, they can be great, but it's not a system. Find a system that stays consistent, and that's how you build a real profitable thing.
I would agree, and I would add a couple things to that. When you're adding indicators or signals, so with any trade, so this is going back to the 4 questions. That 4 questions starts with, what is that opportunity? So the opportunity could be a condition that you go, okay, there's something to happen. So like if we look at my chart right now, the next playbook trade that I'm looking at is what's called a structure cleanup trade. So there's singles inside the initial balance. It represents impulsive trade, and it's a wide initial balance, meaning like we've kind of stretched what we would expect to see in the first hour. And so if we are unable to continue to make higher highs and higher lows, we spend more time in the initial balance. We're increasing the probability that we're gonna trade and close these singles. So that gives me a destination, which is essentially overnight high. I put an alert here. So that's the driving input. So now there's a potential idea. I have a destination in mind. Okay, that's great. All of the other things, the signals, the indicators, can be confidence factors to help you enter, define risk, and stay in the direction of that destination. So they themselves are not the destination. They themselves are not this is the input that should drive my behavior. These are the things that help as additional aspects of confidence to go forward. And with those, understand the difference. It's worth sussing out which of those are predictive and which of those are descriptive. For example, a VWAP is predictive. Why? Because every hedging program on the planet uses VWAP, intraday VWAP, to help essentially discern bias and where they will buy and offset risk. An EMA on a 3-minute is descriptive. It can help you say, oh yeah, we're holding this, but don't believe that there's a fund out there that cares. Okay. So is it describing how behavior is? And you could say, this would be a signal to me that it's starting to have some weakness in price if it went through that. Yeah. But there's no fund out there that's going, you know, what we really want to look at is an 8 EMA on a 3-minute chart. They're not. That's too micro for them. So things like an average trading range. Okay. Average trading range is descriptive. Expected range, which is derived from the implied volatility of the options, that's predictive. Okay. So if I know the expected range of a product, which is what I look at in terms of determining ranges every day, that range and expectation will change based on positioning within the options, and that can get wider or smaller. An average trading range is simply that. It's just an average. It's a look back. Can it be helpful? Can it describe? Yes. But understand those differences of prescriptive versus descriptive, right?
Let's do some lightning questions. Apparently we have a bunch, and then we'll hop on to Josh's second trade. He'll review that in the same kind of way. When do you add? When do you add to trades, Josh?
When do I add to
After
trades?
initial entry, yeah.
I don't.
Okay, good. Nothing wrong with that.
Yeah, nothing wrong with that.
You find your opportune moment, you find your signals, and he takes the execution.
So now I will add. That's a great question. I would say I used to, and the structural changes that occurred with how much zero DTE is in place means that things don't get follow-on behavior the way that they used to prior to, say, November of 23. So in the past, if I had a trade going, I would compound it and push that trade. I don't do that anymore.
Okay. Next question. What's your average pips win rate?
I don't know. The win rate percent. So win rate percentage, like all of that in your positive expectancy is based on. Let's ask a different way. Ways people ask that question. If I'm determining trades that have a favorable reward to risk, I can have a low win rate, right? I mean, I stay in the 75 to 85% win rate area, but what's more important to me is making sure that I'm taking asymmetric bets, and I'm taking those destinations based on what's available ranges out there. Is there a known reference? I'm not saying, hey, I'm going to enter here and I have a 10-point risk and I need to hold this for 30 points. That's arbitrary, and the market doesn't care about that. So if you are taking trades where it's closer to a 1-to-1, just know that if you want to have an account that grows, you have to have a ridiculously high win rate. As far as goals on a day, so I don't have a set point goal per day. I have a set percentage range goal. So if a market's 100 points wide, I had a good day if I at bare minimum got 25 points. It's very reasonable, I think, that you could capture 25 points or 25% of whatever available range was there. That means it's going to change, right? So if it's 200 points, I should get 50 points. If it's 100 point, if it's 50 points, I get 12.5. I'm adapting to what's in front of me as opposed to, well, I got my $200 and I'm done.
How many trades a day do you take? That's just my question. So,
Yeah,
I mean, in the range, where do you typically find it? Yeah.
Yeah, I mean, typically 2 to 3 playbook trades a day.
Makes sense, especially since your trades revolve around the opening.
Yeah, I look at 6 products, and I typically find 2 to 3 playbook opportunities across the 6 products.
Cool. Next question, Raj. What targets do you look for during the day? Previous value area, high, low, high volume nodes. When preparing a daily analysis, what should we focus on as targets? What confluences do you look for to find A+ setups? There's a loaded
Yeah.
question.
So target is defined by the trade itself. So like this one that I'm stalking at the moment that we're going to look at is a structure cleanup trade. So the target is that we clean the singles, which that would take us back to 24. So, but that's that specific trade. If it was a trend continuation trade, okay, if it's, I believe I'm in a trend day, then I'm going to be targeting at least 2x the initial balance. I'm probably going to exceed the expected range of the day. I'm going to look to hold that probably till the last hour of the session. If it is a prior value test, that's where the auction is testing the prior day's point of control, then that's the target. So it's all driven by what's the playbook trade. If it's an initial balance, go with, which, I mean, if you don't have a playbook trade, an anchor trade that you use, this is a great one to look at, is to wait for the first hour to complete, see which side it extends, and, you know, look for a reference outside of the initial balance range. 50% extension of the width or some known reference can be a really reasonable target. So again, all depends on the specific playbook trade. As far as like building the analysis, so I start everything from the posture of the auction. So what I mean by that is we talked about those references of the price and then the 5-day and the 20-day. So like here's ES. I've also got the 90-day here, but if we just if you're a day trader, you're looking at price, 5-day, 20-day. There's about 9 orientations of those 3 variables, and that basically sets the narrative expectation. That and what was the prior date type is how I determine what's my expectation for the next day. So just to give a contrast, you can see here, essentially we're balanced because we've got ES is basically equal to value on the last week and the last month. But let's look at gold, right? Gold, here's price, 5 days all the way down here at 4,000, 20-day is down here at 37.82. So what's the different expectation? On gold, I'm expecting gold to lose steam. I'm expecting gold to try to, you know, find an area, maybe it's 4,200, maybe it's 4,150, and just trade sideways for several sessions. What am I looking for in the ES? Because we're at those references. I'm looking for it to move away from them significantly, higher or lower, but it's going to move away from that range. That's the narrative process there.
So if price does trade there, I mean, that's one of your main strategies is it goes sideways for several days and then breaks out of it. And then you're looking for a hold and maybe a run through that open or a continuation.
Yeah. I mean, you could distill, and Dalton talked about, you could distill all auction behavior to 2 things. It's either trending or it's consolidating. We would say it's balanced or imbalanced, right? What nobody tells you is like, well, how do you measure that? Like, how could you measure that in a repetitive way? And I use these 3 references of price, 5-day, 20-day, has been really helpful to discern, is this market in the move phase or is this market in the rest phase? So in this case, where you've got all of those references spread out, what's gold been in? It's been in the move phase. What's the next behavior? Rest. So when everybody can see this, and this is what I call an extreme posture, where these are all stacked, we're gonna go sideways. Now, it doesn't mean that we don't go to 4,300 first, but if you're buying gold right here thinking that you're gonna like just get a rocket ship, you're most likely going to be disappointed. Whereas,
all right, let's get to the next question.
Yep.
Go ahead if you want to finish that point.
Oh, I was gonna say, like, ES. I mean, I bought an iron butterfly in the SPYs today because in the next 30 days we're gonna make a run from these prices, and we're either gonna make new highs or we're gonna run to 65.50 or lower because we're balanced. You got inventory that needs to express.
On a day like today where we opened with a gap, how do you determine where this is a gap and go situation or a gap fill?
Yeah, no, that's a great question. So where we were on this. So a gap is defined as totally new ranges. Meaning when we opened, we were totally above the prior day's high. That's a gap. Measuring open to close is not a gap. Unless it also means that we're in entirely different ranges. And why is that important to understand is that if you have conviction overnight that's got you into new territory, so what is that? Then will that hold? And not all gaps are the same. We look at gaps in tiers. So there's a tier 1 gap, tier 2 gap, tier 3. Today was a tier 1 gap. What's a tier 1 gap? A tier 1 gap, and these are all based on the expected range of the product. So if I'm less than 25% of expected range, about 65% of those instances, we close the gap. Exhibit A. Okay. If we gap 50% of the expected range or 75%, it's about 50-50 where the gap will close. And if we gap the full expected range, so if we're expecting 250 points and we gap 250 points, it's a 3% chance that gap's closing that day. Mm-hmm. So it's new territory and then how much of a gap.
One thing to point out there is we're friends with the guys over at Edgeful, and they do a lot of automated bag tests that are updated to a 15-minute window, I believe, or faster at this point. But you can slice and dice all that gap data, so you guys can see it for yourself, just how some of these scenarios play out statistically, and it's super helpful when you're making decisions on time of day, gap fill, what should you expect, because trading's really all about expectations, usually driven by most recent price movement. So
and that's
definitely check out those guys.
That's a great platform. Behavioral statistics can be really helpful to help you understand what's normative auction behavior. So it's not a trade, but it is hey, how do I stack probabilities in my favor?
Mm-hmm.
Next
one. So what risk should I use per trade when 25K account has $400 drawdown per day? What do you suggest?
I suggest you get a different plan. $400 a day in risk in these markets is really, really tight. I would go to a 50K and at least give you 1,000. And again, risk is defined by the destination. So rather than thinking about a certain dollar drawdown, think about the specific trade. So if you're unsure, this could be a clue that maybe you need to spend some time figuring out within your playbook trade, your 4-question trade, what is the typical heat that you're taking on that, and then right size the account to that. And the futures desk guys have a great way. You don't have to be doing a tryout. You can actually do it as practice on their platform. Highly recommend this because you can figure out where do you need to be and then go to try to get the fun stuff, right?
Cool.
Awesome. Let's do the giveaway. We need to be respectful of Josh and Josh's time. I don't want to keep them past an hour. So let's do the giveaway and then finish it up probably with did you want to show one more trade?
Yeah,
I don't know that I don't know that I have time for it.
Okay. Yeah, no worries. All right, Raj, if you jump up the giveaway screen, and we'll let Josh butcher the name.
Yeah,
let's
have Josh answer one more question, and then giveaway will be
okay. What is the question?
Do you target any number of points per day, or take whatever the market gives?
He kind of already answered this earlier in the stream.
That one.
Yeah, it's repetitive. Good question though. If you want to go back
check it back. But also while we're pulling up the spinner, I like to look at it as how many trades setups do you generally see in a day based on your strategy and your playbook, and then split that up into risk per day and risk per trade. And you have to have an idea of what you need to risk for your trade in number of points, and then that translates to a dollar amount, and then you can kind of pyramid that out, where here's your max you'll risk in a week, max you'll risk in a month, because you need that stopping point. But it should always be, to me, the simplest way to do it is just a division based on your total risk per day, risk per trade. It's a good starting point. Here we go. That's a lot of names. I believe we're doing 2 spins, and it'll be $200 credit each.
Oh man, come on.
David Frechette, you're a winner.
Nice. You're a winner.
Congrats, guy.
Raj will send you an email with
Unless
the
you
credit
won before,
notification.
and then remember, guys, come on, be fair. Don't enter multiple times if you've won before. What do we got? Hard name? Come on.
James Boches.
His last name's a little
I think that's
little-
right.
tricky. I think you nailed it.
Not bogus. He's bogus. Yeah. Well done, James.
Congrats.
Very cool.
All right, what do we got? Some more questions. We'll finish it up with some questions, and got a couple minutes left.
Do you want to describe Sunday's gap, or do you feel like you covered the gap?
Sunday's gap.
We can just move on, I guess. What do we
Yeah.
got next? We talked about
What was-
how he treats gaps.
What was Sunday's gap?
I'm
Sunday's
assuming
gap.
equities,
So gap.
price
So
moving
again,
up higher.
yeah, per the definition of gap, meaning you're in different ranges. It was not a gap.
Right.
Monday was entirely inside of Friday's trade. That is not a gap.
So from his terminology, it might be different than a lot of people's terminology, where they're looking for there was a gap in price from Friday to Sunday night, from the closing price to the opening price that seemed more substantial than a normal gap. But in his terminology, he doesn't use that. He's looking for a price to build value in a range, possibly multiple sessions, and then when price breaks where that area of value was previously, now he's interested. Now it's a gap. Now people are out of position.
Yeah, and he
Well,
did
price
explain
really
it
just discovering.
in
He did.
detail at the beginning of the stream. So just watch back. He explains it. Definitely is a different view than what most people say. Hey, this is a gap. His gap, there's a different definition, and there's 3 different stages of that gap. So just go back, rewatch it. He really explains
Which is funny because from a professional standpoint, how I would define a gap is how a gap is. It like retail would say it's a gap, and there's not anybody at the CME would say that's a gap.
Right.
Like that's not a gap. A gap is
It's also
entirely
sort of like
different.
the opening range, right? That's usually
yeah.
the actual opening
There's
range itself is
30
the first
seconds.
30 seconds, right?
30
A lot of
seconds
people
is
say
an
the
opening.
15-minute orb.
Yeah.
And there is a 15-minute candle that you can do a time period on. CME is also going to say 30 seconds. The first
30
30 is
seconds.
actually
30
the
seconds.
definition.
I could speak real quickly to like what happened on Friday
Sure.
in terms of
Yeah.
like where is there from where we opened to where the close was. So there was movement from that was pretty significant. We didn't touch that until yesterday, that close. And actually there was a spike lower in Globex after the close that we have not tested that either, which I think that we will retest at some point. The market got too short. We had not had a 3% day in about 125 sessions. That's pretty rare. And we finally got one. And you had people who undoubtedly went home short. And so then over the weekend, news comes out, you open, and now you're having to cover. And it just was a short covering rally, is all it was. But not a gap.
Cool.
All right, gang, you guys are awesome. Keep rocking and rolling. Do I consider Trump's tweets? I tend to not listen to toddlers, so no.
But I guess the point would be is like, are you looking at the tweets and no volatility's coming? You're waiting for it. Does it change anything about your trades?
The only thing I would say is, we are in an environment that is headline driven. There's going to be likely some, especially since Friday, there's going to be some statement each day that may induce some volatility. The question is, does it actually significantly change what's happening narratively, or is it just a statement? If it's just a statement, we'll return back to wherever that price was. If it is substantive, then that could be new information that the market responds to. I don't like have his feed up to look and see when he tweets, because you can just tell, oh yeah, there's some movement. There is nothing scheduled to be released. I know where that came from.
Cool. So guys, just to recap on Josh, he's got the website Trade with Profile. He does have a interactive stream and group of traders that he works with. So if you want to work with him, highly suggested. He drops a lot of really good practical knowledge. He's a CTA, I believe, still himself. Is that correct?
Yep.
And he traded institutionally. This isn't just him saying, he Googled a few videos and this is what he came up with. He's got a real track record here on trading in both retail and institution. Trading.
I think people tuning in and watching him explain things and how he can actually articulate everything, everyone realizes, no, this guy knows what he's talking about.
For sure.
There's
just there's a lot of nonsense on YouTube. This guy isn't one of them. So definitely suggest you check it out and hop on that. And I believe you're working a bit on another. I don't know if you're talking about that yet. We can move on if you're not. But you have some stuff you're working on.
Two platforms that we're working on. One is called MeFlow, which is it's going after the problem that this next generation of Americans, like all of you all likely on this, are the first generation of Americans that are going to do worse than your parents. And that kind of pisses me off. So what do we do about that? One of the ways that you're going to do worse than your parents is that you're not going to have enough at retirement. The number now is 3 million to have a comfortable retirement. And that means that you'd have an annual income of, let's say, 125K. When people can't buy houses, half of Americans, if they had an emergency, they would put it on a credit card at like $500. So if you were to try to have 3 million at retirement, say that you were going to save/invest for 35 years, you need to save/invest $23,154 a year for 35 years. That's good. Like, what are you going to do? What are you going to do?
Good luck with that.
Right? Good luck with that.
Yeah.
So how do you fix that? Turns out there are two dials that you can turn that could radically change that outcome. So one is you got to plug into a different investing playbook. There is a playbook out there, and it is multi-leg options. So the fact that we don't have to pay commissions on options anymore, on like Robinhood, Webull, whatever, that is a significant advantage that every retail trader has now. Now, what's the barrier? What is a multi-leg option trade? What stock do I apply that to? So our platform finds those and serves them up to you in a feed. The second dial is you have to be a better investor. Like, you have to think in 4-question terms. You have to know how to allocate trades and allocate your capital, which we also do that. So if somebody is thinking about or would like to retire, you can check out meeflow.com, MIIFLO.com. And there's a free account that you can get started with. It's a 1-month trial to start. You can immediately set a balance and start investing with our ideas. We call them drips. And there's new ideas every day. And it gives you alerts on how, like, basically to help you manage the risk around those. So that's one platform.
Look like the right website. What is the website URL again?
MIIFLO.com.
FLO. There's no W.
No W.
The W. Yeah. There we go.
Yeah,
cool.
That's the one.
And so that's shorter term or longer. So you're saying that is longer term.
It's longer term objectives, but you're going to be in a position for like 20 to 40 days.
Okay.
So
it's not only recommending it, it'll actually do the investment.
So like we have Tradier as one of the brokerage connections right now, but public.com and Tasty Trade are coming on next. And then all of the usual suspects after that, but it's one-click trading on multi-leg option trades.
Very cool.
Yeah, it's badass. You should be about it. And then we're also developing a platform for futures traders called Signal P, and that is essentially giving people signals on my playbook. So it's not the entry, but it's just saying, hey, the driving input is here. Here's the confidence factors. At least automates that. Yeah, there's a playbook trade in play, and here's where the destination is. So now I can focus in on where to play that. And we've even talked about folding that into the futures desk platform, so that those signals could be available to you guys. So
I think that we should still look at that. I think that's a good way for traders to work with a specific strategy or program or educator like yourselves and get that tied right into their platform with us. So
yeah, because I mean, like when I got started, I was given trades, right? I was given, hey, this is your trade. Okay, Great. Well, then how do I do with that? How do I execute on that? I at least have to have an idea that has some merit, and then I could iterate off of that. And so, the idea is, hey, I can give you the playbook. Then what you do is you actually have to execute those to find out which is the one that's the best fit for you. And that becomes your anchor trade. That's the trade that when nothing else works, you can home base to that and write the ship.
I like that. And you do have some courseware on your Trade with Profile site as well.
Yep.
Does it cover a lot of these strategies? Do you still feel
Yep.
you still promote that, right?
We do, at least for another week or so.
Oh, okay. What happens in a week?
Yeah, once we
More
roll out
news?
Signal. Yeah, once we roll out Signal P, then
Gotcha.
it'll change the world.
Okay, someone was asking for the website of the Signal P.
Yeah, if they just go to the TWP website and sign up for the newsletter there, they'll let once we're live and ready to take people on there, they can get it there.
Awesome. All right.
Okay, guys, I gotta
is
bounce.
there
Great to see you.
yeah. Anything else you want to throw out, or you're good?
I stay at it, gang. Like, part of this game is staying in the game, and just keep working. Do the work. Work on the practice of the trade. Like, work on the trade, and also work on yourself. Like, trading will really reveal who you are, and that's scary sometimes for people to find out.
It is. Yeah. All right. Thanks, Josh. Thanks,
Okay.
everybody.
Yeah,
Cheers.
thank you so much for joining us, guys. A lot of knowledge dropped today. Go back, replay the video, because I can tell you it's very condensed, and he shared a wealth of knowledge. He, talked about some systems and some things that actually have edge. So go back, learn it, figure out if it's right for you or not, and go from there. But thanks, everybody. Peace. Thanks for joining us.